The views and opinions expressed by the host do not reflect the values of the management or the institution. Furthermore, the views and opinions expressed by the guest do not reflect the values of the host, the management, and the institution.
Good day, students. So, today we'll be tackling the concept of fiscal policy and monetary policy. We're here to delve deeper into the concept on how governments and central bank try to monitor and try to control and mitigate effects of inflation, effects of depression, and also how they invigorate the economy through such policies. So firstly, we'll be delving into two different types of policies here. One is fiscal policy, and the second will be monetary policy. Firstly, fiscal policy would also involve the power of taxation, government expenditure, and trade policies. Whereas when you go to monetary policies, it now focuses on money and interest rates, as well as foreign exchange policies. Now, fiscal policies are used by government entities while monetary policies are used by the central bank or any central banking entity of any country. Like sa Pilipinas, we try to use the Bangko Sentral ng Pilipinas who utilizes monetary policy to help control inflation and also control interest rate. In fiscal policy, on the other hand, we have central government such as the current central government of Duterte. That's the one exercising fiscal policy. Generally speaking, these are all government entities across the world. So if you go to Europe, you'll have the European Central Bank. If you go to the USA, you have the Federal Reserve Bank. Now, each country has their own distinct central bank, which has their own distinct strategy on how to coping up with inflation, coping up with the market that we are facing. Like right now, we're already facing COVID-19. So both governments and central banks are now employing both fiscal policy and monetary policy to control inflation, because of course when we go back to our lessons in chapter 2 and also in chapter 4, you get to see there that of course when you have panic and when you have chaos, your demand for a certain product would now increase. Going back to chapter 3, since that demand for that product would increase, siyempre the price of that product will increase drastically because of that demand for that product. And because of that, siyempre we'll all have this term we're hearing nowadays of panic buying, which is a general phenomenon happening in any country when you're facing with a pandemic or a crisis. So, before anything else, we'll first delve into fiscal policy and how it controls or how a country utilize it in such a way that it helps control inflation. Now, in hindsight, monetary policies, this refers to actions central bank take to pursue objectives such as price stability and maximum employment. Whereas when you go to fiscal policies, it refers to the government's revenue collection and spending decision. So usually it's Congress and administration that is utilizing the policies here. Because in monetary policies, central bank is the one acting on it, while fiscal policy, you have the government and also Congress moving for it. Now, in perspective, when you go to fiscal policy, there are two kinds of policies that any government can utilize. We have expansionary and then contractionary fiscal policy. When we say expansionary fiscal policy, we're now focusing on how to increase economic growth and government spending. So usually this is being done when you have a struggling economy. Let's say for example, back in the USA, when they had the 2008 financial crisis, when the mortgage bubble blew, and of course there was a free fall and a bank run with banking entities, the federal government of the United States had to employ a massive stimulus or spending package. So it was I forgot how much, 200 or 300 billion dollar stimulus package that aims to, number one, provide relief to taxpayers, number two, make more infrastructure projects, and so on and so forth. So it was focusing on spending, spending, spending. Why? Because in a recessionary type of economic scenario, your country is currently having a downturn, a slowdown of economic activity. Well, in this case, because the banks were having a default on loans or having a crisis on their borrowers defaulting on their loans, siyempre, the banking system is run on trust and confidence. Now, because of losing confidence with their consumers, everyone is just having a free for all, trying to get all their money out of the bank. So, siyempre, the banks will be in a state of crisis, trying to cope up with the massive amount of people defaulting on their loans. So the US had to step in. They had to give relief to the bank, give them loans, give them all liquidity so that they will not fall. Because if one of the pillars of institution would fall during that crisis, siyempre it will have a ripple effect across not only in the US but on the rest of the world. Just like here in the Philippines, well, we didn't felt much of that kind of effect because we had a very strong fundamental uh, in our economic foundations in our institutions. But siyempre naman, we also felt the effect of the 2008 financial crisis. But because of our economic planners, they know how to act on these kinds of crises. They were able to withdraw our investment from the US before it happens because recessions can be predicted on various tools that economists can employ. But for the purposes of our lesson, we will not delve deeper into that. So here, going back to expansionary fiscal policy, focusing already on trying to improve or trying to boost economic activity by spending or having tax breaks. Another thing that a feature in the expansionary fiscal policy is increasing aggregate demand of the economy. So when you say increasing aggregate demand, well, because we have a downturn in our economic activity, we try to increase that by giving people jobs, people work. We'll discuss this more deeply in the next slides. And lastly, government operationalizes this policy by increasing government spending and or decreasing taxes. So basically, government institution has the prerogative kung they will just spend more money or just decrease the tax collection so that people can have more money to use. Whereas when you go to the contractionary fiscal policy, you see that government is now trying to make the economy slow down. Why? Because as you all know, if you are having a huge amount of economic growth, but having too much economic growth, it's very bad for an economy because of course, everyone has to catch up with that kind of economic growth. We have the terms of inflation being discussed before. So, if you have too much inflation, siyempre, it's very bad for all all parts of our society to be hit by it. I mean, inflation is not bad in a sense. Maintaining it at a sustainable 2 to 4%, which all economies are trying to achieve, like the BSP, which has been achieving that kind of target ever since 2002, has been able to maintain that kind of inflation rate. Everyone can catch up because the increase of the price of goods and services is very sustainable, meaning dahan-dahan lang. Whereas when you have a inflationary economy, which means that the economic activity is very quick, so siyempre the increase of prices would make other members of society not be able to catch up with that increase in price. Because siyempre, when you have inflation, tataas din ang price ng bilihin. So too much inflation is bad. That's why in Venezuela, in Zimbabwe, when you have hyperinflationary, that is the most extreme example. From the value of 1 peso, it could become 100,000 pesos for their economy. Na yun ang equivalent sa 1 peso natin. So, siyempre, purchasing power would be very small for that country, having faced a hyperinflationary scenario. So, for government to avoid that, they employ contractionary fiscal policy. Now, this policy focuses on trying to slow down, trying to slow down economic activity. Not halt it in a sense, because siyempre naman, we cannot halt economic activity across our country. We can only slow down, put some break into the economic activity cycle. So, ang focus dito is trying to decrease the aggregate demand of the economy. So, government operationalizes this policy by decreasing spending and or increasing taxes. So, we'll discuss more deeply about these kinds of activity when we go to the next slides. So, when using an expansionary fiscal policy, government tries to, as we said a while ago in the previous slide, increase economic activity. Now, government increases its spending on public goods and services such as building roads and expanding current infrastructure, among others. Increasing subsidies to the private sector is also another thing the government can employ when they're trying to utilize an expansionary fiscal policy. Now, because when government tries to spend on infrastructure, let's say here in the Philippines, we have the Duterte Build, Build, Build program. So, siyempre, that is a expansionary fiscal policy. Now, for government to, of course, to operationalize the Build, Build, Build program, they would need to hire workers. Now, siyempre, they would hire workers. When hiring these workers, siyempre, they will have to pay them. Now, because people or hiring workers will give them income for them to spend on their goods and services, now you have more purchasing power for the household sector to purchase any goods and services they would require. Now, because they have more purchasing power to buy goods and services, the private sector would have more funding when the worker or the individual is now buying from them. Now, if the private sector now has more funding, they can now spend on R&D, they can now spend on resources. Now, they can also spend it to their employees, which would then have more purchasing power to buy goods and services, and the cycle continues. So, much like, in a sense, there's a trickle-down effect. Now, government being the first one initiating that kind of cycle would now trickle down that kind of uh, that effect to the middlemen, to the workers, to the private sector, and so on and so forth. So basically, if you're going to analyze it, once the government injects funding into the in the economy, in the market, siyempre it would now invigorate it kasi people will have no more purchasing power. If people have more purchasing power, they would be able to buy any goods and services they would want and need, and it would now pay also the people holding those inputs, also the people holding the resources, and also the people holding the products, so on and so forth. So basically, in a expansionary fiscal policy, everyone is winning, because in a downturn like in the U.S. stimulus package, they would view that as people having more opportunities to generate income, because in a downturn there are businesses that are closing, people are losing jobs, unemployment are now increasing because there's a downturn, there's a slowdown in the economy. So now, in the sense, when using expansionary fiscal policy, it increases economic growth and capacity. So in the long run, of course, we know that it will help the economy become more enlarged in a sense, because real GDP and nominal GDP are two different activities. But siyempre, in every cycle, every boom, bust, recession, thought, siyempre you notice that the economy is always increasing. That's why, like in the Philippines, we are currently holding a GDP growth of 6 to 7%, which is the fastest in the world. Advanced economies like the US, Britain, Sweden, Denmark, Russia, they only hold at a GDP growth rate of 1 to 2% because they're already developed. Their institutions are now able to provide more advanced kind of relief. Unlike here in the Philippines, because we're a developing economy, so siyempre we have a lot of opportunities to grow. in our institutions, in our governments, in our private sector and public sector. So basically, there's a lot of opportunities of improvement, means more opportunities for growth. Unlike in the developed countries like the US, Sweden, Denmark, Britain, these are well developed, so there's not much improvement that they can do, but there's still opportunities for improvement. Okay? So now go to a contractionary fiscal policies. These are occasions wherein there is too much inflation. Of course, in our previous lesson, you would have discussed already inflation as the how quick the cycle of economic activity would turn. So it will also indicate also the growth of prices from this point from a certain base year relative to the growth of prices month after month. So like when the 2018 train law passed, you had a big inflation of 4 to 5%, unlike the target of 2 to 4%. Bakit? Because of the entrance of excise taxes for fuel, like fossil fuel, nagkaroon siyempre ng effect sa lahat ng elements ng ating society because majority of our economic activity is still run by fossil fuel like gasoline and diesel. Now, because of that kind of activity, because of that kind of legislation, well, because of the additional taxes, it also increased price. So, nagkaroon din ng inflation din doon. It not only affected the grocery sector, I mean the retailing sector, but also all other sectors that are dependent on transportation done by fuel because these additional costs incurred from excise taxes and VAT is increasing the prices in our goods and services. Now, this is one of the many methods of government can use when they're using a contractionary fiscal policy. Now, when using a government when using a contractionary fiscal policy, government decreases its spending on public goods and services such as they do not build much new roads, or they do not expand much on the current infrastructure, or they decrease the subsidies given to the private sector. So this is a more focus on government spending. So any decrease in government spending is part of contractionary fiscal policy. Another way that also contractionary fiscal policy is being felt is how taxes play here. But we'll discuss that in the next slide because there's a separate discussion for it. But in either case, when government spending on public goods or in public services has been decreased, it lowers the salary of our workers hired by government, or it's in this case even fire them because of course the project might have ended, or maybe because there is not enough funding, or because they're using this kind of contractionary fiscal policy. Now, if there is less salary for the worker, or they were fired from working, they would have less purchasing power to the household sector. Since after all, workers are part of the household sector, holding the factors of production. Now, less purchasing power to buy goods and services by the housing sector, there will be less uh, private sector funding, or the business sector would have less funding available since people will not be buying from them. They cannot buy their wants. They're only their needs na lang. So, bumaba din yung resources na available sa private sector natin. And because of that lowering of funding in our private sector, it now has less spending on R&D, less spending on resources. And in the short run, it would have less purchasing power for their employees since siyempre they might have to let go some employees because of their curtailing efforts, just like the Philippine Airlines. Philippine Airlines had to let go some 500 employees because of operating in the red. So, government entities might employ that kind of contractionary fiscal policy. They would affect that in the private sector. So, see, so from a public sector perspective, you try to reduce spending, it would have a big effect until it reaches Philippine Airlines. which is a private sector. That's one of the hypothetical scenario. But siyempre naman, alam natin sa balita that Philippine Airlines reduces their cabin crew is because of they're trying to curtail unnecessary expenses because of the COVID-19 and also mismanagement by the previous administration of the Philippine Airlines. Because for the past 2 or 3 years, they were already running in the red. So, from Jaime Agosto, I forgot his name, the former CEO of Philippine Airlines, which is a trusted friend of Lucio Tan. But in any case, yun nga, that could be one effect. Let's say if government increases taxes on fuel. If you would increase your taxes on fuel, that is a contractionary fiscal policy. If that would be affected, it would now increase the prices of fuel. Increasing the prices of fuel would have private sector willing that effect. Kasi siyempre they have to pay more to just purchase fuel. Now, in the long run or in the short run, they might have to let go some of workers because of the increasing cost of fuel. So, this cycle in contractionary fiscal policy from lowering spending on new infrastructure or maintaining current infrastructure or even maintaining certain programs in the government or subsidies. Decreasing that subsidy or that government spending would have less salary for your workers or your business receiving subsidy, which would entail decreasing purchasing power to the household sector. And because of that, decreasing power to the household sector, they would have less purchasing power to buy goods and services. And if they don't have much purchasing power, siyempre the private sector or the business sector would have less funding as well, which would entail that they would have less funding to have more R&D. They would have less funding for resources. And they would have less funding to pay their workers, which in turn would have to curtail or would have to let go. And the cycle continues, which in the end slows down economic growth and capacity. Okay? Now, a while ago, I was mentioning taxes playing a role also in fiscal policy because fiscal policy is the tools a government can use, and one of the tools they can use is taxes. Of course, siyempre naman, you might study taxes when you go to your collegiate education. You'll know that everyone has to pay taxes because it is part of contribution of a citizen to the state in order to provide protection, to provide the social protection a person needs, and also the protection from criminality, and also a functioning government and bureaucracy. So, taxes are paid by the populace to the government to help pay for social services, build infrastructure, and provide protection, among others. Hindi lang dito nagtatapos yung definition ng taxes, but this is just a brief definition for our discussion purposes. Now, taxes can serve as an expansionary fiscal policy by decreasing the tax to be collected, ultimately increasing the available money that the household and the business sector can use. So, yeah, from the definition itself or from the statement above, it can become expansionary when people have more opportunity to spend. Because people will have, like in the US stimulus package, they employed a expansionary fiscal policy by giving tax relief to a lot of businesses and individuals. And because of that, people have more money in their pockets, which they could buy more for their wants and needs, which the business sector can benefit, and it would have a multiplier effect to the economy. So, it can also serve as a contractionary fiscal policy because it increases the taxes to be collected, ultimately decreasing the available money the household and business sector can use. So, in the case in the Philippines, example, Duterte say that he wanted to amend the 25-year-old National Income Revenue Code or the NIRC, which is the basis of all taxation, by introducing the Tax Reform for Acceleration Inclusion Program, also known as TRAIN. But that is actually a fiscal bill, meaning it is a tax revenue bill. It did not per se decrease tax, but rather it increased taxes of course, they had to sacrifice the personal income tax. But then again, they increase excise tax. They increase the taxes on final income taxes. So, in effect, nag-increase pa ng revenue ang government. Kasi, di ba sabi nga nila, sabi ni Secretary Dominguez sa Congress, this train bill not only helps simplifies our taxation, but also pay for the build program, which in this case needed funding. So, anong nangyari? Nag-employ sila ng contractionary fiscal policy. Because syempre the Philippines, one of the tools the Philippine government can use is yun nga, tax bills in order to decrease economic growth. Kasi syempre, being one of the fast-growing economies in Asia, syempre, masyadong mabilis tayong mag-grow, 7%. So, baka siyempre hindi humabol yung mga policies na pampabagal sa inflation, so government might have to employ this to help achieve that goal. Anyways, continuing, yun nga, when you increase the taxes to be collected, it decreases all the available taxes, money and purchasing power the private sector or business sector rather and the household sector to use. Okay? So, in effect, in the long run, that kind of tax policy would affect all sectors of the economy. But simply, we must not also forget, one of the components of the tax bill is also tariff. Now, tariff is also controlled by the executive. Now, I put this here in this example kasi siyempre, we're trying to we also need to understand that other countries also have an effect on our economy. So, tariff is paid as a by the importers to bring in something. Usually, ang tawag nila dito yung custom dues, sila binabayad natin. Pero here in this case for our economy, this is being paid by importers to the government. So to help pay administration fees or protect local industries by making cheap foreign goods far expensive. So in the scenario, let's say in the US versus China trade war, I hope you have heard that in the news. Siyempre, Donald Trump slapped billions of dollars on tariff on the goods coming from China, which is not in effect being paid by the Chinese, but being paid by the American importers. And likewise, ganun din ang ginawa ng Chinese government. They put tariff on the importation from the American states. So in effect, ang nakakaramdam nito is the citizens itself and the private sector, because syempre they're the ones paying for these goods to enter the economy. So like in the Philippines, we also use this kind of policy in protecting our rice. So back before introducing the rice liberalization law in 2019, the Philippines was protective of the rice sector. Pero not much support, pero protective kasi they impose a quota, meaning bawal silang maglampas sa isang quota para lang magpapasok ng bigas. So more or less, our country is dependent on the rice being produced by our countrymen. However, because of the introduction of the rice liberalization law back in 2019, they released that kind of quota. They just need to pay a tariff or a fee or a custom due just to bring in rice. And because of that, cheap rice entered the market, which of course made our rices in our provinces cheaper than it was before. Like Dinarado, back then it was 65. I heard it became 50 or 45 just to beat the Vietnamese or the Thai rice. So tariffs can serve as an expansionary fiscal policy by decreasing the tariffs to be collected, ultimately increasing the available of cheap inputs and goods the business sector can use, and also the private sector. Kasi if people will have to pay less of a tariff to purchase a good, let's say for example, if you're in US, di ba, when you buy let's say an Apple product in the US, it is cheaper when you buy it from the Philippines. Kasi Siyempre, they would first deliver it to the Apple headquarters in the US, in California. Then after that, they will ship it to the Philippines. So, nagkakaroon ka pa ng mga middlemen. So, siyempre, patong on patong, tariff on tariff. So, siyempre, the consumer had to pay that kind of fee just to receive that Apple. So that Apple product, like in the US, it would cost $1,000 or 54,000 pesos in Philippine money to buy a 256 gigabyte na iPhone X. But if you go to the Philippines market now, if you search right now, it costs 73,999 pesos just to buy an iPhone X 256 gigabytes. So tariff and taxes play a role on purchasing goods and services. So, if you have low taxes, low tariff, you can now buy more goods. If you can buy more goods, the private sector can have more funding to make more R&D or make goods, to purchase cheaper imports, and so on and so forth. It becomes a cycle. It increases economic activity. But, tariffs can also serve as a contractionary fiscal policy. By increasing your collection, people cannot buy that kind of good, which also serves as a protective barrier for your local industry if you wanted to play that kind of scenario. But in economics, you don't look at politics kasi usually politics ang nagpe-play dito pag sabihin nila na they will increase tariff because we will protect Philippine-made ganito. Like El Pidio Quirino, he imposed the Filipino first policy. Not American first, it's the Filipino first. So, siyempre, ang kinin ang sariling atin ang the theme of the day. So, siyempre, any foreign good had to inflict a tariff just to buy that goods. So, yeah, because of that, having an increased tariff, also an increased taxes, would ultimately decrease purchasing power or the available money a person can have, which in the end would have an effect on our economy. Kasi magsa-slow down yung economy natin dahil sa ganyang epekto. Less available resources, less funding rather available, less purchasing, and sa slow down yung economy. So, why need fiscal policies? Why not let the market correct itself, di ba? Kasi di ba sa lessons natin in chapter 2, why not have a pure market economy wherein we have laissez-faire or let them alone. Pabayaan na sila. Well, because siyempre classical theories would argue that the economy will, in the long run, will correct itself if it faces recession or large inflation. Like, sabi nga nila back in 1928 during the Great Depression in the US, the economists in the Federal Reserve's bank back then was believing in this kind of theory. Kasi siyempre, pag nagkaroon ka ng Great Depression, siyempre, you will have less available resources, so madaming businesses magsa-shut down. Now, because there's a lot of businesses shutting down, resources will now become cheaper because of the less available competitors buying that resource. Now, if inputs are now cheaper, so siyempre, the businesses can now purchase it at greater quantities. They can now hire workers kasi they believe that some pay is better than no pay. Kasi at that time, I forgot the unemployment rate of the Great Depression economy of the US, pero it was quite double digit, about 20% above, like a third of the Americans I heard. But you can research it and you can correct me if I'm wrong. But yun nga, 20% or above yung unemployment rate ng US at that time. Now, because of that, these economists would believe that some pay is better than no pay. So, siyempre, these workers would be hired, let's say, lower than $5 kaysa sa minimum wage na 8. Ganon. And because of that, low resource price, low cost of inputs from the workers, siyempre, you can now restart the economy kasi meron ka ng resources, cheap na. Meron ka na din workers to do to work in your factories. And now they can now sell the goods to the market at a cheaper price kasi siyempre you bought it cheap, you can sell it cheaper and people can now buy. So on and so forth. The cycle continues and the economy will now recover. Pero siyempre, modern economic theories such as John Maynard Keynes argue that government can make up lost spending by consumers. So, in a recessionary economy, thereby speeding economic recovery. Ang simplified explanation for this statement is that rather than waiting for that scenario to happen, kasi ang iniisip ng classical economic theories, it will recover in time. Kaso, you do not know when would that happen. So, na yung papasok si John Maynard Keynes at sasabihin niya na, hey, rather than waiting for that to happen because it would take a while, why not intervene and try to help those people who have lost that kind of capability. So rather than letting the business sector or the household sector make the solution in the long run, the government can intervene by becoming the one paying for these lost workers by having a stimulus package like in the 2008 financial crisis of the US. That's why, back in 1928, when Franklin Delano Roosevelt, the only president elected 3 times, came into office, he implemented his own stimulus package called the Great New Deal. So, I mean the New Deal rather. The New Deal. So, ang nangyari dito is that people now are being put back to work by US spending on infrastructure, highways, electrification during those times. So, government, yeah, from the classical theories of laissez-faire, we now see government as becoming a one of the main actors in an economic recovery or in an economic monitoring. So, siyempre, our economies nowadays are now interdependent. So it is in everyone's best interest to at least monitor or keep a good health in the economic activities a country is facing. Like example in the US in the Greek states back in 2011. I don't know anong grade nyo, anong grade go during that time. The Greece were facing a default on their loan. So rather than let's say increasing taxes, they could only do is, or the only thing they could agree upon is austerity measure, or in layman's term, cutting government spending. And kasi siyempre, when you have a default on a state, on a loan, it will have a ripple effect on the economy. Like, yung US nga, di ba? Nagkaroon sila ng crisis. Nagkaroon sila ng 2008 financial crisis. It affected the rest of the world. Investment, it was an all-time low in the US stock market. Yan nangyari noong 2008. So, siyempre, it's in everyone's best interest to monitor that kind of scenario. So, therefore, government entities such as the executive branch, usually it's the executive branch monitoring this kind of scenario, or it's the one who can implement fiscal policies. Kasi, siyempre, the executive branch, all the department heads are under him or her. Kaya sa kanya din, nakadependent din yung mga spending. So, this the executive branch can utilize these tools to help boost or control an economy when it faces extreme upturns or downturns. So, right now, sa US, right now, as we speak, they're now having a $2 trillion stimulus package for the COVID-19 response. Gaya din sa Pilipinas natin, ganun din, meron din tayong sariling bill, 275 billion to face the COVID response. Kasi, siyempre, this is an economic downturn. Kasi, we have no economic activity here. Walang businesses, sarado ang mall, sarado ang airport, sarado ang terminal. Ang daming sarado, di ba? We're all trapped in our home. So rather than being faced by that, you try to stimulate the economy by giving assistance to people. Like si Mayor Vico, sabi nga di ba sa news na he'll give 3,000 pesos to their public sector or public utility vehicles. So it would give them purchasing power or resources to buy goods and services, which would increase economic activity. So, stimulus kumbagang ginagawa ng government natin. Okay? Now, so simplified example, when you're doing an expansionary fiscal policy, you increase government spending and decrease taxes. In a contractionary fiscal policy, you decrease government spending and or increase taxes and tariffs collection. Now, that's the part of the government side, how they control or how they monitor the economy through fiscal policy. We now go, of course, I forgot. In summary here, another summary pala, here in fiscal policy, as you can read, expansionary would have laws that reduces unemployment and increase GDP or close a recessionary gap. It was discussed in your previous lecture. So it also increase government spending, decrease taxes, decrease tariffs, or utilize a combination of two or three of these policies. Pag contractionary, siyempre, you're implementing a break. Slow down. So you would implement laws or bills that would reduce inflation and decrease GDP. This would also decrease government spending, increase taxes, increase tariffs, or a combination of these two or three policies. Now, we've done with the fiscal policies, how government try to control the economy. We now go to monetary policies, or how the central bank or central banks monitor or play a key role on economic growth and development. So here it's like a mirroring as well between the fiscal policy and monetary policy. Both can do expansionary policies and both can do contractionary policies. But the method of implementing it are now different. Kasi when you go to the executive branch, a fiscal policy focuses on government spending and collection. Here, in the monetary policy, the central bank does is control the money supply and control the interest rate. Dito, ang intermediary na ginagawa niya is through the banks, the financial institutions that are under the central bank. Which in this case, sa Pilipinas, ang meron sa atin, ang Bangko Sentral ng Pilipinas, it is the one that monitors all banks, also the one controlling the money supply. In the fiscal policy, ang Philippine government ang nagko-control. So how they spend, how they collect taxes, sila ang nagko-control. Dito sa monetary policy, ang nagko-control dito ang yung central bank. So here, pag expansionary, just like kanina, you focus on economic growth on a struggling or recessionary economy. So ganun nga, example natin kanina, 2008, yun din ang ginawa ng central bank or the Federal Reserve ng US. They tried to employ an expansionary monetary policy, which the central bank and the bank institution are now the actors of this policy. Kasi kanina, ang government entities natin, ang actors ng policy na yun. Dito, ang central bank at yung banking institution, sila yung actors ng economy, ng policy na to. So, central banks operationalizes this policy by controlling interest rate, by decreasing the borrowing rate, and increasing money supply. So, that's one way. We'll discuss deeply or more into detail this policy in the next slides. Pag contractionary policy, on the other hand, we now focus on decreasing economic growth and consumer spending in a unsustainable or overheating economy. So here, sabi nga kanina sa previous slide, you try to put a brake on a increase in an inflationary economy. So again, the central bank and the banking institutions are now the actors of this kind of policy. Now, the central bank operationalizes this policy by controlling interest rate, by increasing the borrowing rate or the rate that banks borrow, and or decreasing the money supply available in the economy. So we'll discuss deeply in the next slides. So how does the central bank employ monetary policy? Well, the central bank can employ three methods in controlling the money supply. This is the basic three tools that any central bank can utilize. Firstly, they can increase or decrease the reserve requirement of a bank. We'll discuss more into detail in the next slide. Increase or decrease the discount rate. And lastly, buy or sell government treasury bills or government securities through open market operation. So, siyempre right now, magugulan kayo, ano ba tong tatlong words na to? Ano ba tong tatlong definition na to? So, we try to define the following. So, when we say reserve requirement, this is the ratio of cash that banks must maintain or have in their vaults in line with deposits made by their customers, usually set by the central bank. So another definition would be that this amount of funds that a bank holds in reserve to ensure that it is able to meet liabilities in case of sudden withdrawals. In layman's term, ang reserve requirement, ginagamit ng central bank yan to tell lahat ng bank, example, BDO, BPI, they will say na, hey, lahat ng deposits na nasa iyo, let's say 20% reserve requirement, 20% of the amount you have in deposit, kailangan nasa vault nyo yung cash. Kasi syempre, there will be, you might have big clients that would need cash. Tapos, if you don't have the cash that is available, syempre, kawawa naman yung, magkakaroon ka ng problem with that bank. Kasi syempre, banks have to maintain a level of trust and confidence with their clients. Kasi siyempre, if they don't have any cash available to give to a, let's say, a big ticket client, kasi magbibili sila ng isang big purchase, it would have a big effect on the bank's trust and confidence. Kasi, gawa nung hindi niya ma-produce yung pera na kailangan niya, kasi consumers' confidence depends on if they're able to receive back their cash. That's one of the ways of seeing it. Confidence in the banking institution. Siyempre, kung nag-deposit ka, dapat mababalik din sa yung pera na na-deposit mo. So, here, the central bank will now constrict the available resources a bank can have. Kasi, when you control the reserve requirement, it can have an effect on interest rates, can have an effect on also the available resources to be lent out. So, let's say, for example, here, assumes that you have a bank in deposit and is required to hold 10% of cash as reserve requirement. How much is the free cash? And number two, how much is the reserve requirement? So, if you need to compute that, you have to only just need to compute that by multiplying 10%, which is the reserve requirement, to the amount of deposits the bank have. Usually, hindi lang customer deposit. Meron ka pang time deposit, meron ka pa din long-term deposit, and other forms of depository instruments. Now, multiply mo lang yun, lalabas dito, meron kang 20 million pesos na reserve requirement na kailangan i-maintain ng bangko. Now, from your 200 million peso na available cash that you have, minusing it from your reserve requirement of 20 million pesos, you will have 180 million pesos that is free cash available for loans and other profit-generating activities. Now, because of this, banks can now use this 180 to siyempre lend out to others productively to make more money. Kasi siyempre naman, where will the banks get the money to pay for you pag nag-deposit ka sa kanila? Siyempre, they will have to make their own cash in a way to just pay for that interest they're paying for you. Kaya when you get a loan, mas mataas ang interest na binabayaran mo comparing it for when you deposit. Kasi right now, like say example sa BDO, 0.25%, 0.25% per year ang interest rate na binabayaran sa iyo ng bangko. It's like 0.00025% you're being paid because of that. So it's rather small. Anyways, so by increasing the reserve requirement, the Federal Reserve or any central bank is essentially taking money out of the pockets of the money supply and increasing the cost of credit. Lowering the reserve requirement pumps money into the economy by giving bank excess reserves, which promotes the expansion for bank credit and lower interest rate. So basically, ang nakikita dito yung money supply. Kasi if you have more cash available in your bank, siyempre they'll charge lower kasi siyempre it's better to earn a bit of money kaysa no money at all kung nakatenga lang sa bangko. So they'll charge a lower interest rate to the consumer who is availing the loan Kasi they have a lot of money to spend out, to lend out. Unlike pag nag-increase sila ng reserve requirement, like right now, it's at 30% the reserve requirement. So, siyempre, yung 70% lang pwede na lang ilabas sa market. So, ibig sabihin, meron kang 30% na nandun lang sa bangko, edi sayang yung profit generating activity. So, siyempre, tataasan nila yung interest rate para lang makompensate sa yun nga, sa the shorter amount of resources available to a bank to lend out. Okay? So, the second thing that the central bank can employ in the tools of monetary policy is discount rate. Now, when you say discount rate, this is the interest rate charged to the commercial banks and other financial institutions for the loans that they take from the central bank. So, basically, kasi ang central bank, or like example sa atin, Bangko Sentral ng Pilipinas, it's also a bank. Now, let's say you have that kind of scenario nga, na you have to give, let's say, 100 million pesos to your big time client. Ang meron ka lang sa bangko mo, 90 million pesos in your reserve requirement, or yung palang available doon. So, siyempre, the bank will ask a loan from the banks around it kung pwede makahiram ng pera, which is actual money, or they could actually borrow from the Bangko Sentral ng pera. So, siyempre, they'll charge a fee. Now, siyempre, the lower the discount fee, the more the bank will borrow money. And if you have an increased discount fee or discount rate, so siyempre, mas mamunti ang hiramin ng bangko kasi it is costly to borrow when you have a greater discount. Kasi iti-trickle down nila from the central bank, panghiram sila sa central bank, iti-trickle down nila o ipapasa pa nila sa consumer or sa clients nila kung maghiram sila ng loan, yung cost of interest. Plus patong nila, siyempre profit. It's a business as well, the banks. And lastly, open market operation. So this is when the central bank will now buy or sell government security depending on the nature of the need, like bonds, stocks, or T-bills. Example, si Bangko Sentral, bilisan ng T-bills ng Bureau of Treasury kasi kailangan ng government ng pera. So yun, bibili nila. Pag may scenario na kailangan nilang ibebenta nila sa bangko para i-less lang yung money supply, and so on and so forth. So, this withdraws or injects liquidity into the system, in our economic system, through the banks. Kasi when you sell T-bills or treasury bills, you sell it to the banks. So, how does monetary policy work? Well, when an economy has an excess supply of money, it is easier to buy goods and services, which increases inflation rate. So, dito, malaki ang economic activity natin. So, when inflation rate is increasing to an unsustainable rate, it decreases the purchasing power of the whole economy. Ultimately, increasing prices of goods and increasing the poverty rate of a country is facing if left unchecked, this kind of phenomenon. So, dito na papasok yung contractionary policy. So, contractionary policy works when the central bank employs the three methods or the three tools that we told a while ago. So, pwede niyang gawin, i-increase niya yung reserve requirement. I-increase niya din yung discount rate. So, when you increase these two rates, siyempre, less available cash that should for banks to be lent out to the market when you increase the reserve requirement, and when you have to charge a higher interest rate to sell or to lend to other people because of the increased discount rate, you would have less money in the economy circulating because of that. And when government sells government securities through open market operations to banks, so siyempre, anong pambayad diba ng bangko sa mga T-bills na to, and so on and so forth? Siyempre, di magbabayad sila gamit din ng cash. So, madidikis din ang supply of money na hawak nila. And because they have less cash available to be lent out to the public, andun lang sila. I mean, mag-increase din ang cost of credit na mangyayari, which have a ripple effect in our economy. People will be less likely to borrow from the banks because, siyempre, when the cost of interest is high, you will have less spending. If you have less spending, syempre, you will have a slowdown of your economy. So, sabi nga dito, like I've described before, what the policy does is decreases the available money supply, ultimately increasing the cost of lending and slows down an inflationary economy. So, pero, pag a different scenario naman, pag nagkaroon na tayo ng slowdown, we have to increase it. Like in the 2008 financial crisis, yan din ang ginawa ng Federal Reserve natin sa US. Ang ginawa niya, nag-decrease siya ng interest rate, nag-decrease siya ng reserve requirement. Alam mo actually class na the reserve requirement, I mean the discount rate employed by the Federal Reserve in the US was 0%. Ibig sabihin, you can borrow money and you have to return it at the same price. No need to make a patong to your consumer that much high. Kasi siyempre, the discount rate was actually zero. Kasi siyempre, during a time of crisis or extreme downturn or a recession and depression, central banks would need to take drastic steps just to maintain the financial and economic system and environment. Kasi, siyempre, pag nag-fail ang isang bangko, it would have a ripple effect. Kasi, trust and confidence nga, class, di ba? Ang nag-run sa isang banking institution. If you have a bank that has a runoff, or when you say runoff, all the depositors were trying to withdraw and the bank cannot give money, that's when you had a bank runoff. The bank will have no liquid asset to give those individuals, those depositors, getting their cash out of the bank. Siyempre, mag-lose ang confidence sa financial markets natin sa banking institution, which would have a ripple effect on that economy and the economies of the world. Kaya very influential ang Federal Reserve natin sa US. Kasi kung nagtaas sila ng interest rate, taas din lahat ng interest rate ng buong mundo. Kasi a lot of investment is in the US at the moment. Kasi siyempre, where does most of the economic growth and activity lie? Well, as they say, it's in the USA, particularly the New York Stock Exchange. Now, going back to the 2008 financial crisis nga, yun nga, zero nga yung discount rate. The reserve requirement was very low that the banks are able to sell or to lend out loans in order for them to recuperate the losses. Kasi siyempre, when you default on a loan, you cannot get back the debt there. And it would have a ripple effect. Kaya parang gaya din sa Netherlands, the tulip bulb. When the tulip bulb trade in the 16 and 1700s happened, nagkaroon ka siyempre ng people are speculating na ito'y lalabas na tulip bulb. So, siyempre, maganda, they would invest. But when that bubble increases as more and more people go into that kind of business, and when the expected outcome did not come, let's say in this case na nagkaroon ng crop failure dito sa tulip bulb na forecasting, ang nangyari dun is that nawala yung confidence sa tulip bulb na investment. So it caused a massive default and everyone was panicking. Ganon din dito sa 2008. Houses in the US, well, to give you a brief background on what happened, brief lang. Ang nangyari dun sa US is that you have houses that are mortgaged to the bank. Kasi let's say, during the 2001, 2002, people have less requirement to buy a house. Basta, meron ka lang employment, ganon, okay ka na, you can now buy a house and mortgage it to the bank. So, siyempre, it became easier and easier to loan for a house in the US as time passes by. Kaya, a lot of Americans, kahit wala silang down payment, actually, there was no down payment when they purchased the house in the US. When they already purchased that kind of investment, I mean, that kind of, investment, like buying a house, they are mortgaging it to the bank. Siyempre, the bank, believing that these consumers will not default on their loan, they will believe their word. They will say na, sige, you can buy this house, we'll pay it for you first, but you'll pay us to us in fees and interest. So, of course, it was good for the next 7 years, from 2001 to 2008, until a few houses already defaulted and it spiraled out of control. So, siyempre, pag nagkaroon ng default, it rippled throughout the economy. Kasi, it does not affect one bank. It affects all banks. So, parang 3 out of the 5 major banks in the US, they closed down because of this problem. So, like example, yung Lehman Brothers sa US, nag-close down dahil dun sa pag-default sa mortgages. So, yun, because of that scenario, the federal banks had to do overdrive. Anong ginawa niya? Ang ginawa niya, nag-decrease siya ng reserve requirement, nag-decrease siya ng discount rate, and also, nag-buy siya ng government securities to open market operations. So, binibili niya lahat ng T-bills ng hawak ng bangko. Pero, if you're gonna learn from history, hindi enough yon. Anong ginawa din ng bangko, they did a thing called quantitative easing. So, quantitative easing is when the central bank has to also buy long-term assets. Kasi dito, yung mga T-bills na to, these are instruments lang. Usually short-term, 1 year loan, 1 year T-bill, 2 year T-bills. So, treasury bills, low interest ang binabayad ng government pero short-term lang. Pero dahil dito sa 2008 financial crisis, the central bank has to employ quantitative easing. So, part din ng open market operations din niya. So, binili niya din yung mga defaulted na houses and so on and so forth. So, siyempre, when they buy these defaulted houses and mortgages, they had to give money to these banks. Well, you're gonna ask me, sir, hindi ba magkakaroon ng inflation dahil doon? Kasi siyempre, banks would have more money and they could now put that in the market. So, siyempre, bibilis yung economic activity. Wouldn't that happen a inflationary effect like what happened in Venezuela? What happened in Zimbabwe? They printed their money so that people can buy. For siyempre, because if people have more money and more people have the opportunity to buy that kind of product, so siyempre, kailangan mo mag-inflation para lang ma-increase yung price ng product na yun just to balance it out. Kasi ang hirap naman for a limited resource tapos madaming tao gustong bumili ng produkto na yun. So, sabi ng central bank nila, sabi ni Federal Reserve, well, inflation is everywhere. You cannot avoid it. So, it's okay for them to do that kind of activity by buying long-term asset kasi ang normal sa kanila, buy lang T-bills, government security, hanggang dun lang. But because of an extraordinary event like the 2008 financial crisis, kailangan lang i-increase yun. Okay? So, this ultimately increases the supply of money in the economy and decreasing the cost of credit, which allows the business sector and household sector to borrow beyond their current resources at a relatively cheaper cost, spurring economic activity. So, alternate universe sila, ganun din sa fiscal policy, pero same din ang effect. Okay, class? Same lang ang effect nila. Now, foreign exchange also has an effect on our economy. Kasi siyempre, if you notice, when in the Philippines, when you try to buy something from abroad, you don't pay it usually by Philippine peso. You have to convert it to dollars. Pero siyempre, when we go back to chapter 2 about money and trade, di ba siyempre, when you try to acquire something from that country and you don't have the thing that they want, siyempre, the only thing that they can accept as a medium is money. Now, foreign exchange is influenced by both monetary and fiscal policy, but monetary policy has a bigger effect kasi interest rates and the demand of the consumer has a bigger sway here. So, higher demand for foreign goods increases the cost of that currency. Now, more currency invested in the country decreases the cost of currency and vice versa. So, ang nangyari dito is that when you have a high demand for the currency being stated, for a foreign good pala rather, like example, the Apple iPhone X10, 256 gigabyte, 54,000 Philippine peso or $1,000. For siyempre, because of tariff and taxes, lumalaki ang price niya. Now, to get that $1,000 just to purchase that kind of product in the US, the Philippines has to trade with the US to any business sector, private sector, public sector. any sector, as long as they can receive that $1,000 from from any American or any country rather that has $1,000. So usually pumapasok na dito yung concept ng supply and demand to find a appropriate foreign exchange rate. Now, class, if you remember in your finance and in your finance pala, sorry, yun lang. In your finance, foreign exchange is determined by, siyempre, kung ilan ang supply na meron ka versus the demand that your country needs. Now, the Philippines doesn't have only Philippine peso in its central bank. It also has US dollar, yen, Chinese yuan, Japanese yen, European euro, and so on and so forth. It has different currencies in its bank. Bakit? Saan galing itong mga currency na to? Remember, class, that we have OFWs across the world. Now, President Pinoy Benigno Aquino III and President Gloria Macapagal Arroyo dubbed this OFW as the modern Filipino hero. Why? Their remittances, all the remittances, dollars, euros, and stuff, are being remitted to the Philippines. So, siyempre, pagdating sa Pilipinas, yung currency na yun, sa atin na. So, siyempre, ang gagawin ng government, sige, you give me these remittances, I'll give to your loved one, Philippine peso. Now, the government, having controlled this kind of currency, they can now purchase needed machinery and needed technologies that would help propel the Philippine economy. Yan ang ginawa ni Gloria at ni Pinoy. Kaya, right now, we're still feeling the effect of their policies in the Philippine market. Kasi yun nga, it was a brilliant strategy that these remittances, rather than loaning from these countries, kasi siyempre, pag nag-loan po tayo, di ba mag-i-increase ng interest? So rather than loaning, we have our own supply of money from our OFWs. We can now purchase these equipment and these technologies that will help us build our economy. And because of that, yun nga, mababa yung exchange rate nung panahon na yun. Nowadays, same din na may maintain, pero dahil we have the build program and we have a knack or a taste for foreign goods and services, siyempre we need more foreign currency. Kaya if you notice, dati 35 pesos ang to 1 US dollar. Ngayon, it's already 54. Kasi a lot of Filipinos have purchasing power that wants to buy those kinds of products. So, siyempre, low supply, high demand, increase the price just to find the equilibrium point. Now, here, a simplified diagram. So, in phases of a monetary policy, when you have a inflationary scenario, you have currently a loose money policy, meaning that you can borrow easily, consumers buy more, businesses expand, more people are employed, and people spend more. Pag ganito ang scenario mo, siyempre, at a certain point in time, you will now employ a contractionary monetary policy, also known as a tight money policy. So, pag ganun nangyari, you will make borrowing difficult, you will make consumer buy less, and you will make business postpone expansion, unemployment increases, production is reduced. Ganun mangyari pag nagkaroon ka ng contractionary policy. Now, siyempre, pag masyado nang mabagal yung economy, i-employ na natin yung expansionary, which will make inflation work. You will become loose again. So, it's a cycle of boom and bust. Or, contract, expand. It's always a cycle. So, in the end, it is always a constant balancing act between employing contractionary or expansionary policies in an ever-changing free market landscape. So, it's dependent on in our government institutions and our central banks to how to maintain a perfect balance in the policies they are employing. Kasi siyempre, at the end of the day, they somehow have an influence in our lives by moving these tools. They can control how we live and how we can buy goods and services. Like right now, we're facing a lockdown. We cannot buy any other goods and services other than food and basic hygiene. We cannot buy any theater. We cannot consume any services. Kasi yun nga, safety is the number one priority of our government. So, then again, class, always remember to stay safe, study your work, and pray. Yun lang. pray actually. We do not know when will this quarantine end, but at least this supplementary lecture will help you learn the lesson as we wait for the quarantine to lift. So until the next lecture, I'll see you again class. So thank you for listening and see you again.